All right, accounting one kiddos, welcome to chapter 6-2. It happens to be the hardest section of chapter 6, which is doing our adjusting entries. It isn't necessarily hard to do, it's just sometimes kids have a hard time wrapping their head around doing adjustments. So our objectives today are to analyze and explain why we need to do adjustments for supplies and prepaid insurance, and then to complete the adjustment columns on our worksheet. So, first things first, let's talk about what adjustments are and why we do them. We have two types of things called prepaid expenses. A prepaid expense is where we pay cash for an expense in one fiscal period, but we don't actually use it until a later period. So one of the examples is if we buy supplies in January, we might use some in January, we might use some in February, we might use some in March, there might still be some available in April, etc., etc. But in accounting, we only want the values of the supplies used in January to be reported as expenses in January, because that means that we have the most accurate information for when we complete our financial statements. So the expense should be reported in the same fiscal period that it gets used to produce revenue. And that's the accounting concept of matching expenses with revenue. If we used, let's say, um, printer ink in January to earn revenue, we want to expense that in January, not in February. So there's technically two types of accounting, and my accounting 2 students will know all about this, or they might just be getting to it. Is talking about the difference between the accrual basis of accounting, that's kind of a fun word to say, accrual, and the cash basis of accounting. The accrual basis of accounting says that we report income when it is earned and expenses when they are incurred. And GAAP, if you remember GAAP, generally accepted accounting principles, requires that we use the accrual basis. That means we're matching our expenses with the revenue that they earned. The cash basis of accounting is where we report income when the cash is actually received and expenses when the cash is actually paid. The major difference between the two is simply timing. One is used when cash is received. The other is when income is either earned and expenses are incurred. So we work with the accrual basis of accounting. They just want you to be aware that there is such a thing as the cash basis. It's just that it isn't kosher with GAAP. So that's why we have to have something called adjustments. And adjustments simply are changes that are recorded on a worksheet that update general ledger accounts at the end of a fiscal period. So the reason that we do that, again, is to make sure that we give the most accurate information on our financial statements. So there are two general ledger accounts at this time that need to be brought up to date at the end of a fiscal period. The first one is supplies. The second one is prepaid insurance. Okay, so let's talk about supplies, for example. The value of supplies that are used during a fiscal period becomes an expense to the business. Okay, and the reason we do it at the end of the month is because you can't record an expense every single time that you use a supply. For example, a pencil or a pen, or you clean a toilet with toilet cleaner. Like, you can't record an expense every single time that you use it, but you can figure out at the end of the month how many supplies that you have left. So therefore, what happens is at the end of the month, what we do is we take what we used out of our asset account and we transfer it to an expense account. Okay? Because if we've used up that asset, that means that that has become an expense of the business. Okay? Because if you remember, the definition of an expense back in chapter 2 is that it is a cost of doing business. It costs the business something in order to make money. And that's essentially what a supply is. So, when changes are made, okay, we don't actually do this until they are journalized and they are posted. Okay, So the ending balance of the asset account should represent the amount of supplies that are remaining on hand. The amount of supplies used during the period should be recorded in the expense account. And this is going to make more sense when I show you on the next slide, but I put this in here just so you can come back to it as a reminder. If it says the ending balance, that's the amount that we still have in our supply account. The amount used is what we need to figure out for our expense. So it says, on January 31st, Mr. Delgado counted the supplies on hand and found that the value of supplies still unused on that date was $90. Okay, so that means we still have $90 of supplies on hand. That's the balance in our asset account right now. So we ask ourselves 4 questions. 1, what is the balance of the account that needs to be adjusted? What should the balance be for this account? What must be done to correct the account balance? And then what is the adjustment that needs to be made? So let's look at how we do that. Before the adjustment, our supplies balance was $620. Okay, but remember, Mr. Delgado just counted our supplies and it says we have $90 on hand. Okay, so this is our new balance. So in order to figure out how much we use during the month, we take our balance and subtract out our new balance, and that's our adjustment. So $530 worth of supplies were used. We credit that $530 out of our asset account, and we debit it to our supplies expense account. Okay, and that is our adjustment. We have a debit, we have a credit, they're equal. That's where we're coming from. So all we're saying here is when we look at our trial balance, you can see that we have a balance of 620, but then it's going to say Mr. Delgado counted $90 worth of supplies. So that means the difference between those two is our adjustment. Too often where kids get tripped up is that they will put the $90 over here as an adjustment, and that's not correct. Because if you read what the transaction says, it says that we still had $90 of supplies on hand. That is not the adjustment amount. So you always have to figure the adjustment. If you don't do any figuring, it means that you did something wrong. Okay? So we write the debit under the supplies expense, and then we write the credit under supplies, under our adjustments, and those are the only 2 things that actually end up in our adjustment. I want you to just note the little A. The little A just signifies that this is one adjustment, and then there's going to be a B for our second adjustment. Okay, that's all that means, is the little A's and the little B's. Okay, so the same thing happens for prepaid insurance. If you know anything about insurance, what happens is you always prepay, hence why we have prepaid insurance. You pay for car insurance, you pay for home insurance, you pay for life insurance, you pay for that all up front. So let's take a car, for example. You pay for 6 months of insurance on January 1st. So you have coverage for 6 months, which would bring you to June. Okay. As you go each month, you no longer have that insurance. It turns into an expense. So you take it out of your asset account and you transfer it to an expense account, hence the need for an adjustment. So they don't give us a transaction on this one, but it would say the new balance in prepaid insurance is $750. Okay, so we would take our 900 minus 750, which means we've used up $150 of insurance. We take that out of our asset with a credit, and we debit it into our insurance expense. Okay, and then it looks the same as it does on our worksheet. Notice how same thing happens. We debit our insurance expense, we credit our prepaid insurance, and then we make sure to put our little B's there to signify that this is these two go together as part of an adjustment. So they sort of show you what it will look like here. We still do single rule, add up our debits and credits. It should be relatively easy because you only have two things in your debit column and two things in your credit column, but they should equal, and then we extend both our single and our double lines as well to prove the adjustments column of our worksheet. So we are actually going to head over and do our 6-2 work together in MindTap. We'll see those transactions again, but remember, if you need to, come back, oops, excuse me, I'm just going to go like this real quick. Come back and ask yourself these 4 questions if you need to, okay? This will help you make that adjustment, because too many times it will give you adjustment data at the top and you read into it and think that that's the amount you need to use for your adjustment. But remember, I said if you didn't do any figuring, if you didn't have to do a calculation, then you have something wrong for your adjustments. Okay? So I'll meet you over in MindTap and we'll do our 6-2 work together.